And what we have today, increasingly now for 20 years, is a style of capitalism where the stockholders are leaning on the corporations to take it easy on capex. Why? I mean, basically, it generates an economy of mild shortage all the time. You want to make money, that is the world to live in. So, mild shortage all the time, pressure on the workers. In the good old days, they always built an extra plant. It was the bane of stock analysts like me in the 60s and 70s. Whenever things started to improve, 8 paper companies would all start to build a giant plant at the same time, and they would crash the prices. It was great for jobs, great for GDP growth, pretty good for productivity, terrible for stockholders. And now we don't. The capex has dropped as a fraction of the total pretty steadily for 20 years. The degree of concentration, or monopoly if you prefer, has risen pretty steadily for 20 years. And it's all legal because it's the stockholders breathing down your neck saying, dudes, buy your stock back. Don't build a risky new plant. It might work well. It might be mistimed. In any case, it's risky. Better to wait and see which of the hundreds of VC firms work out well and then grab one or two of the best ones. It's a capital transaction, doesn't go into the income statement. The optimal flight path to long-term profit is to be resolutely bullish and pump out as many new instruments and as many new funds and products as you can on the way up, and then be a little quicker and slicker on the way down, regroup as quickly as you can, try and make a bit of money on the downside if you're smart enough, and then make a long drawn-out fortune being bullish again. There's no edge in being bearish for them, and so they never are. You tell me why the Morgan Stanley guy today is so bearish. I don't know it. He hasn't read the secret little book of advice that comes with those jobs, which says never be bearish. This is about as bearish as any guy in a firm like that has ever been in my career. The only other example was UBS Brinson, after they'd done a deal with Gary Brinson, who was a suitable value-oriented investor going into the 2000 event. And they pumped out rather cautious advice like we did at the time, but they were the 8,000-pound gorilla. And fortunately, they changed their battle plan to get religion and go into the growth stocks just before the end, somewhat leaving the field to us. It wasn't that there weren't a lot of other value managers around. They just weren't standing on the table shouting like we were.
Hey everyone, it's Clay Fink here. Are you looking for an investment opportunity in a $2 trillion market? Look no further than Atacama, the cybersecurity industry's latest game changer. Atacama has opened its doors to US accredited and international investors alike, already attracting over 5,000 investors and $6.5 million in capital. Atacama's recurring revenue model saw 10x revenue expansion in 2022 alone. They have patented technology and large contracts secured, including one with the US Department of Defense. This is a limited time opportunity to get in on the ground floor of a rapidly growing cybersecurity startup. To learn more, simply visit invest.atacama.com/WSB. That is invest.atacama.com/WSB. Full disclosure, I have personally invested in Atacama's equity crowdfunding round at a $29 million valuation. Please keep in mind that investments in early stage companies do contain risk. As with any investment, crowdfunding investments do offer attractive potential upside, but they cannot offer any guarantees of a future return.
So we're at a level of New Cross Gate in the US, and Sweden is 84. We've managed to open up an 8-year gap in life expectancy as if we were on the cusp of a developing country. And we've gone backwards for the last 7 years, which is unique in the developed world. And the only one who comes close is the UK, which is flat for that time period. So we have lots of things to worry about. And they all seem to be coming somewhat to fruition now in time to overlap with what would be a fairly normal, traditional recession caused by the usual reasons. And will these long-term is now factors, will they make it longer and worse? I think it's a possibility, which I've tried to write about. I don't think it's certain. I think things this complex can never be certain. But I think it's quite likely that we will have unexpected negative consequences for the next few years. The way we state the unemployment rate, we're always very proud that we have more people not working than Europe does. They seem to have found a new willingness to resign if the job is crummy and they're not paid enough. And they have been treated diabolically badly since about 1975. If you look at the increase for an hour worked, it's up 10 or 15%, adjusted for inflation, in 45 years. And in France, it's up 150%. And if you read Business Week, as I like to say, it would have appeared over that 45 years that we had done nothing but kick French bottoms because of Eurosclerosis, French incompetence, bureaucrats, et cetera, They take too much time off, they have long holidays. But when they work, they're very productive and they get paid a ton more money than they used to, and we do not. Even the lowly Brits are up 60%. The Japanese are up over 100. How is it that our average hour worked in manufacturing has done so badly?